Good evening, traders and investors. Will back here with another one, coming to you with a Tuesday market recap. Hopefully you guys had a very good day in the markets today. And in today's action, well, the bounce continues. Very nice follow through by the bulls right now, completely engulfing last Thursday's candle. The S&P not looking too bad. The QQQs not quite engulfing the Thursday candle, but a very nice push nevertheless. And the big highlight of today was the market breadth. If you take a look, all of our major components of the market were up and notably up today. That being said, take a look at the heat map, guys. Heat map, very strong performance across the board. Sure, a few names were left behind for very specific reasons, which we'll talk about in today's video. Namely, NVIDIA, AMD, Oracle, as the debacle between Google and NVIDIA continues at this current time. A very nice day of market breadth. And if you take a look at some of your breadth indicators right now, this is some of the best breadth that you've seen in about a month at this time. Look at the percentage of stocks above their 20-day moving average. Coming in from the low of last Thursday, 25, when we said, when indicators get this low, it's pretty good time to be buying the markets. Huge push. Now 60% of their stocks recapturing their 20-day moving average. The market broad and the momentum now definitely shifting in favor of the bulls. Your percentage of stocks above their 50-day EMAs, same concept. Nice pop off the bottoms, guys, when at that point in time last Thursday, only under 30% of all stocks in the market were above their 50-day moving average. Now we are almost back to 50%. So yes, the recovery story is underway, and it's not concentrated into only some of the tech names that have been sold off. No, it's a question of everything coming back. And of course, that probably has to do with the rate cut odds coming back up right now, 84% chance of a 0.25% interest rate cut in the month of December. I'll remind you as to why. Last Friday, we heard from Mr. Williams, who is a Fed member, of course, saying that he favors a rate cut in the month of December. Yesterday, we heard from Governor Waller saying the exact same thing. And today, we got some economic data, which kind of tilted these rate cut odds a little bit higher too. That information, today was this one right here, the PPI, Producer Inflation Index, coming in under the expectation, 2.6% inflation versus the 2.7 expected. This is a pretty good read. So inflation on the producer side on a nice little downswing over the past month and a half at this current stage. Retail sales also coming in a bit softer than expected, 0.2 versus 0.4%. Now, these are two things that are showing you that inflation can't really be present right now because it's kind of a paradox, right? Your inflation number on the producer sides is coming down and retail sales has also slowed a little bit. So I guess it kind of takes us out of the premise that there is going to be everlasting inflation and a huge burst in inflation because of the tariffs, of course. You take a look at your Truflation Index too, 2.38% right now. This index measures over 15 million products on a daily basis, so it's much more wide than both the producer inflation metrics than the consumer price index metrics as well. And I really like using this one too. So inflation still not a problem in the US economy. Now, of course, consumer discretionary spending is still a little bit soft because of the accumulation of the prices over the last few years. But we always measure inflation on a forward basis. Is it getting better or is it getting worse? And what we're seeing right now is that it's not really getting much worse. Are there some one-time impacts from tariffs? Yes, but they're making their way through the economy quite slowly at this point. So those two economic releases did push the interest rate probabilities for a cut a bit higher, which is something that the markets really loved. So I'll remind you guys, in terms of the most recent sell-off, it was in two parts. Number one right here was the bit of the AI exhaustion trade, the concentration trade, and we just kind of started coming down. A lot of the neo cloud providers and some of your big tech names started sliding after their own respective earnings. And then leg number two, this one right here, that all started with the government reopening cycle, which happened right on that candle right there. And then when we lost the October data for CPI and for the non-farm payrolls, the markets really didn't like that. The rate cut odds plummeted because prior to this candle, the rate cut odds for December were about high 80s to low 90s. We unwound everything, market breadth absolutely collapsed. And as a result, now in the past 3 days, what has changed? Nothing has changed about AI. If anything, people are still quite hesitant surrounding the AI story, but what we're not hesitating around anymore are the rate cut odds. So this is arguably what the market wanted, right? If there's still a lack of clarity surrounding AI, I mean, I'm fairly clear on the AI trade. I'm sure some of you are as well, but the market isn't, right? Especially from since those NVIDIA earnings, right? Is NVIDIA still going to be the king? Is Google taking over with the news yesterday? Are big tech companies spending too much money on CapEx? What's going to be the ROI on all this stuff, right? Is Michael Burry still short? There's still a lot of cloudiness in the AI trade, of course, right? So that hasn't been solved, but the market is still pushed higher. So obviously you can understand what the market actually truly wanted, right? It wanted the rate cuts. And as a result, now that the rate cut odds are higher, you can see the market start to recover in a broad fashion overall, which is exactly what you want to see. So in today's video, guys, we have a few things to discuss together. Number one, we're going to be going over the index rundown. Take a look at the SPY, the Qs, and our minor sectors. Check on the rotation and see where we can possibly best position to benefit maybe from a December rally into the end of the year if the bulls are able to really convert this very nice bounce into a new daily uptrend and put an end to the weekly consolidation cycle that we've been in arguably since the last month of trade. We'll take a look at all our indexes and give you that rundown. Thereafter, we will do the same thing across our big tech names. Now that a lot of these big tech names have come down in a substantial fashion over the last month, which one of these names or several of these names are buying opportunities for swing trades, leap call contracts, and which ones are good additions to a long-term portfolio right now. Towards the end of the video, we will go through the biggest gainers and losers of the week, or of the day rather, very briefly. I mean, the same names were on the lows today that have been printing the lows over the past few days. So you guys probably know my stance on a lot of this stuff, some of the crypto names, some of the AI names as well. But a lot of the market was pushing significantly to the upside today. So of this list, I will kind of reiterate what are some of my favorite buys in the market, some core positions, some growth names that I'm looking at, etc., rather than going through these items line by line. And at the very, very end of the video today, if we have time, I will go through my portfolio, show you guys the trades that I've been making in the YouTube account, as well as the total returns for the big account, because I don't show you that often, right? The Discord members know, but I know you guys don't know about the big trading account as well, which I often reference on the channel. So we'll take a look at the big account and the year-to-date performance across the portfolios. And that should be it for today's video. So hopefully you guys enjoy. Now let's jump right into it, shall we? So the SPY up 0.94, the Q's up 0.62 with very good market breadth. Take a look at the heat map. As I already said, very broad market performance, really hot. NVIDIA, AMD coming down because of Meta's news that they were going to be buying some TPUs from Google. And people are just when this happened today, guys, it was just screaming buys on NVIDIA and AMD. This is a perfect example of what we've been discussing the past few weeks, being able to determine true signals from noise in the markets. And this was one of the most egregious examples of noise that I've possibly ever seen in the past, at least in the past month or two, right? I mean, all of these companies, AMD, right? All the big tech companies as well, when they reported their earnings, and NVIDIA saying there's just too much demand. They're sold out across the board, and the big tech companies are constrained for demand. They are going to get chips wherever they come from, whether Google wants to outsource some of their TPUs that they use to build the Gemini model, whether people still want to be using NVIDIA and AMD chips. But people forget, man, a GPU that NVIDIA and AMD are making, right, is not the same thing as Google's TPUs. TPUs are custom silicon chips. They're purpose-designed chips only for training large language models. The only companies in the world that have large language models, I'll remind you, are Microsoft with its partnership with OpenAI. Then you have Google. Then you have Meta. And then you have a bunch of side partners like Anthropic and such as Perplexity and other things like that, right? A lot of the other companies, guys, right? Why are the big tech companies buying so many NVIDIA GPUs? For their cloud offerings. Cloud offerings is not the same as training AI LLM models, right? Think of the Amazon cloud or Microsoft Azure cloud or Google cloud and all of the people that rely on those servers. They need more server capacity to onboard more customer data into the cloud. So the cloud versus training a large language model are two completely different things. You'll use the NVIDIA GPUs for the big tasks at hand, such as the cloud services that the big tech companies provide. And then the TPUs can be used. You guys know that Microsoft's making their own, Amazon's making their own, Google's making their own. Meta is trying to make their own and also sourcing some potentially from Google over the next few years. They are training chatbots. It's not the same, right? A lot of other tech companies, guys, are not training chatbots. They only need cloud services from all of these providers, right? So today sparked a bit of concern between that deal with Meta, Google, and then NVIDIA and AMD coming down. And NVIDIA even put out a news memo today, which I found quite humorous, saying we're delighted by Google's success. They've made great advances in AI and we continue to supply Google. NVIDIA is a generation ahead of the industry. Ooh, shots fired against Google, man. It's the only platform that runs every AI model and does it everywhere computing is done. Now, the GPUs do many other things than only training AI models, of course, right? Cloud storage purposes, namely. NVIDIA offers great performance, versatility, and fungibility than fungibility than ASICs, which are designed for specific AI frameworks or functions. So NVIDIA basically saying like, listen, guys, are you guys forgetting what we just said literally 2 weeks ago, that everything is sold out and we have so much demand, it's just coming out of our ears? People are so quick to forget what NVIDIA said just a few weeks ago, not only during their GTC conference, everybody forgot all those partnerships, all the advancements. Everybody forgot what NVIDIA said after earnings. Everybody forget what AMD said during their earnings. Everybody forget what Lisa Su came in and said after earnings in their investor relation conference about a week later. Everybody is just so quick to forget and hit the panic button and say, oh no, it's over for these big companies. They won't need GPUs anymore. Apparently, everybody's going to be switching to Google. So easy to forget. Sometimes the market throws you excessively easy buy opportunities, such as stuff like this, but only if you kind of know what you're doing. What today kind of showed us is that the market, for the most part, right, knows about AI, but at the same time, doesn't really know the intricacies of what's going on here between the hardware players. But as a result, if you have information asymmetry, such as we do on the channel, right, well, you can derive some very interesting buying opportunities from these dips, which are very superficial in nature. So the heat map was pretty good, but NVIDIA, AMD coming down. Financials doing very well, healthcare doing very well, the bottom half of the market doing excessively well as well. Not only consumer defensives, but also consumer cyclicals, man. Really strong moves in some of your retail names today and other consumer cyclicals as your market breadth improves. Moving on further to the one-day relative, you'll see that everything was pretty much on the highs except for utility and energy. 1 week relative is looking a lot better than it was last week for sure, right? Only utilities, energy getting left behind a little bit. The market led by communication services, which I'll remind you is largely Google and Meta. And that being said, right, the 1 month relative performance, well, the damage has still been done since the end of the month of October, of course, but we are regaining some sectors progressively. Technology is still the biggest loss leader over the course of the past 1 month, but healthcare has been doing such a phenomenal job of pulling its own weight within the S&P 500. So that was very good as well. In terms of fear and greed, guys, we're still in extreme fear territories right now. The markets, a lot of the components are such easy buys right now, and you don't even need to look further than some of the big tech names that have come down tremendously, which we will cover later on in the video, of course. But there are so many fantastic buying opportunities, so many huge names, household names, and very easy tech plays are down 15, 20, 25% from their highs that they had just about a month ago. Extremely easy buying opportunities in the market right now, in my opinion. Moving on further, you might remember yesterday we talked about various indicators of market breadth. Not only the percentage of stocks that we talk about on a regular basis, such as your, percent of stocks above their 20-day EMA, 50 EMA, those were crushed. We had extreme greed. That was already an easy read, but I showed you guys even more statistics in terms of the momentum indicators, right? In terms of your Zweig breadth and thrust indicator, usually when it gets this low, it's always a buy. It doesn't mean that it can't drop a bit lower. It means that you should start to be buying during that consolidation phase, right? Moving on further, you might remember I also showed you the McClellan Oscillator Index, which is also a nice index in terms of market momentum and market breadth overall. You can see that when it's clipped into here over the past few years, it's always been a buying opportunity. Even if it can go a little bit lower, guys, it just means you have to be buying around or in that area overall. That's where we start buying. And last but not least, the VIX as well, right? All these hints were telling you guys that the markets were a buy. But I know every single correction, we probably lose a few of you guys. As a few of you guys get a little bit fearful and you start saying, uh-oh, that's it. That's the end. That's the start of the 20, 30, 40, 50, 70% S&P 500 correction that comes around once every 30 or 40 years or so. We always think that it's going to be right now. But once again, guys, that's your ability to determine, right, to be able to filter between short-term bearish temporary narratives and long-term bullish tailwinds, right? So you should be able to determine, at least now better, what is a signal for a very large scale correction and what could possibly just be construed as noise, right? Everybody has to work on that because I'm pretty sure a few of you got shaken out by this drawdown right here, removed possibly a lot of positioning rather than when we were talking about it on the channel, removing the positioning and lighten up the positioning here. And then when you get the best deals on some of the best companies in the market, then we deploy, not the opposite, right? In terms of getting fearful down here, selling everything and saying, you know what? I'm done. That's it. The market is absolutely cooked, right? Never think in extremes, guys. You have to kind of not think of things in terms of black and white. It is always shades of gray in the market. Now, that being said, that's everything for your early introduction presentation. Let us dive directly into the indexes right now and do some TA. So the SPY daily downtrend was clear as day, but now nice 100% engulfing move. The bulls creating a ton of space off of those Thursday and Friday lows. Your MACD momentum indicator seems as though it is curling over right now. Very nice. We haven't had that since the end of the month of October. So it's been a month. The month of November has not been very fruitful for the market right now. And we know that usually that's not the case, right? November is usually one of your best months, leading into another very solid month, which is the month of December. Seasonality this year has been a little bit all over the place, right? April wasn't bullish because of the tariffs. It only became bullish when Trump paused the tariffs. And the seasonality has just been kind of awkward this year. Yeah, September, October are supposed to be consolidation months. We ended up getting some of the best months of the year. So I guess they delayed the consolidation into November, but we might be looking good into the month of December because this nice recapture here, a lot of space off the lows, gives the bulls two opportunities. One, the good old breakout out of support right here, 674 down to 666. The breakout, the retest, and the reset of the daily uptrend, or the two-step process if we start faltering from here, which would be surprising because their futures are up right now in the aftermarket. Now, they can reset like this, higher low and possibly higher high, but when you have a 100% engulfing move, the bulls have the best chance of recapturing the daily uptrend and also possibly making an attempt to salvage this weekly uptrend as well. We never lost it. We came very close. Equal lows. We hadn't lost the weekly uptrend in so long here, guys, since the month of April, right? And we didn't use it. We didn't lose it quite yet. We came very close. We are now back above the ever so talked about 50-day moving average recently. And we also bounced perfectly from the 12 EMA on the weekly. So the markets are looking pretty good on the S&P. The one thing that gives me a little bit more confidence is the market breadth. If you get a bounce on low breadth, well, then it's not very good. We're getting a bounce on somewhat low volume because it's a bit of a short trading week, right? Thanksgiving trading week. But this engulfing move, you got to pay attention to it. Moving on to the QQQs right now. QQQs, not quite a full engulfing move, but very close, guys. This is like a 90% retracement. Gives the bulls a great chance to do one of two things. Give us an attempt at a breakthrough of resistance, 611 down to 605, where we are right now. A breakout, the retest and reset of the uptrend up here, or at least you got a lot of space off these 581 lows right now to be able to reset a new daily uptrend with support being put below us, still 596 down to 590, which was recently reclaimed, right? The MACD also not looking too bad for the cross, so everything pointing to the fact that the bulls have more in the tank to possibly go for more gains. In terms of the weekly timeframes on the Qs, this is peculiar, right? You cut your weekly higher lows, but you did not close the candle below your weekly higher lows. So we almost, you could say that we lost the weekly uptrend as well, and I would possibly agree, right? That being said, guys, right, equal lows roughly. Now the bulls are going to have to do a big job in getting this weekly uptrend back, right? Either by going for the full follow through here or the two-step process when these markets kind of level out and people approach these markets with a bit more level-headedness, because it's been a whole lot of action, a whole lot of volatility, a whole lot of talk about bearish narratives left, right, and center, especially around AI. But the AI trade, guys, has not changed at all in the past month. What has changed is people's expectations in terms of short-term gains surrounding AI. What has changed is the trade got a little bit exhausted across some technical indicators, but have the fundamentals of the AI trade changed? No. Are all the countries that are pouring billions and arguably trillions of dollars into the United States for AI infrastructure, has that changed? No. Have deals from Saudi Arabia all the way through Asia interested in building out their AI infrastructures? Have those deals changed? No. So there's still a lot of deals in the pipeline remaining to be had overall. So your QQQs are looking quite good right now. And we also had some news in terms of AI productivity, which is everybody's question, right? Anthropic coming out with a study today saying that AI could double US productivity growth by 1.8% in terms of an annual US increase, which is double the rate of current productivity. And that was done through a study of 100,000 real conversations with its Claude chatbot to calculate potential economic impacts as the technology achieves widespread adoption, which is really good, reducing task completion time by 80%, with healthcare assistance tasks seeing time savings up to 90%. Very, very, very strong right now, right? In terms of complex tasks being solved, that would take other humans 1.4 hours to complete and cost $55 in human labor costs. Those are now all done in minutes. So the productivity gains are real. They're still early stage, but they are starting to be felt right now in terms of how people are using AI on a day-to-day basis. Moving on to XLF financials. Financials are the biggest beneficiaries arguably of the rate cuts, right? Or the rather rate cut odds moving higher, as I should say right now. That being said, right, we just got the new daily uptrend. I know it's very messy, right? Lower high equal lows, right? High, low, higher high, new daily uptrend. So that's the end of your weekly consolidation phase. It has been a weekly downtrend, so the bulls need to recapture. But even though this time frame may be confusing, although we are into support 52 to 50, the biggest time frame here has always been the monthly. I've been raising the alarm pretty much on this time frame, saying, guys, we come down here to financials, could be a nice monthly higher low attempt into the 12 EMA, which we did come down into, for possible further moves to the upside come 2026 or late 2025. Several nice opportunities in financials. I will remind you, Visa, easy money in my opinion, guys. MasterCard, easy money in my opinion. Months and months and months of consolidation. They've done nothing all year. Names like SPGI, easy money in my opinion. Names like Moody's Corporation, easy money in my opinion, as they've accumulated huge debt re-rating pipelines over the next few years as the interest rates come down, as various corporations will have to re-rate their debt and use Moody's and SPGI in that process. So just some of the financial names that I'm exploring, some of the more solid ones, of course. Moving on to healthcare. Healthcare, super strong, man. Congratulations, guys, to everybody who was able to follow us in this healthcare trade, buying call options down here. You guys now must be very happy. These call options are now up 150%. So you guys made some money on our healthcare trade that some people were questioning down here, which is always the case, right? But sometimes people forget that, you know, a large multi-year area of support and a big divergence from the SPY usually always does correct in the direction to the upside, right? The overall direction of the market. The MACD on the monthly is now crossing. Huge engulfing move by the bulls. Daily uptrend, full control right now. Big momentum push. Overbought conditions into the all-time highs. If you have a bit of a pullback, looking for a higher low, anything above 151, we'll just be looking for a higher low for possible further trend continuation on the weekly. Blasting off right now. The higher lows are all the way down there. So whenever the bulls get tired, we have so much space to set some higher lows. But congratulations to everybody who has held those healthcare trades very strong. You guys must be up a lot right now, and I'm very happy for you. Moving on to semiconductors right now, getting a bit of a bounce off the lows. A daily downtrend is still in motion, right? A nice bounce right now, the same as yesterday pretty much, because NVIDIA and AMD came down. We got a nice roughly 70% bounce underway. So one of two things, right? Give me the higher lows and set the uptrend in 2 stages, or give me the engulfing move and set it up here. But we are reclaiming this 50-day moving average. On the weekly, we bounced off the 12 EMA. Very nice area of pullback, right? We were always looking for a weekly higher low. You cannot say that it's truly set until you recapture the daily uptrend. But so far, it is looking quite good for semiconductors overall. In terms of the monthly, we have pulled back slightly on the monthly timeframes, not as close to the 12 EMA as possible. So this is where I wouldn't necessarily do the index, but I would be looking for individual names, because some names didn't pull back that much. Other names, which we cover regularly on the channel, which have very good valuations and will be the center focus of this trade for the next few years. Other names, such as AMD, they're down 23% from the highs. Names like NVIDIA, super strong from the GTC highs, guys. That name is down, was down at the peaks, at the lows of today, down 20%. So individual companies within semiconductors are very strong buys. And, you know, we've been kind of hinting at AMD and NVIDIA recently. So hopefully you guys are able to make some sense of those hints. Moving on to IWM Russell right now. The Russell really responding well to rate cut odds. And that's how you know, man, this is what the market wanted, right? When you're seeing the Russell fly like this, it's definitely not AI. It's the rate cut odds, right? So daily downtrend, engulfing Thursday's high and blasting through the resistance area, 240 down about 237. We perfectly came down and backtested the monthly higher lows. We've been talking about this area for a while, right? Very nice backtest of the monthly higher lows. I am not in the Russell in terms of the small cap ETFs overall. I am in some individual small caps, but I'm not in the Russell overall. But the Russell is not looking too bad for some possible expansion. Eventually, you will need to reset the higher lows. Possibly if you come back down here with this nice engulfing move, 240 down to 237 would be a very nice breakout, retest, and possibly run trade for some swing trade longs. The Russell not looking too bad at all. And even some of your minor sectors performing really well today. Shout out to XLP. We've been talking about this one for a long time, right? Consumer staples. Not too bad at all, guys, in terms of bounce off of the lows. I know these names have been absolutely crushed recently. Consumer staples might be looking to come back, right? Some of my favorite names in staples, well, my favorite name overall in staples, Costco. Costco is currently coming down in a nice fashion, monthly consolidation. So it's just an accumulation trade for some shares for the long-term portfolio. Costco from the all-time highs right now, down almost 17, 18, 19%, which is usually a very solid entry for this company if you are a fan of buying some longer-term shares. That is pretty much the only company that I'm adding in my long-term portfolio too, because I've had it for a very long time, but I'm adding a little bit of shares. Not a tremendous amount, but I am a fan of buying in these lower locations. Now, moving on to the VIX. Now, you guys know what I mean when I say when the VIX is high, you got to buy, man, right? Either by selling some short puts under the market or just accumulating some shares for your long-term portfolios. But I know a lot of people get shaken out because the fears are high. It's extreme fear, right? Momentum is very big to the downside. People are fearful. You got a lot of noise, a lot of conflicting narratives, and you just kind of want to turn everything off, sell everything, and kind of just wait until you have more clarity, right? Well, sometimes the bounce happens really fast, yeah? So now the VIX going from 27.28. The options premiums were fantastic for selling options, especially put options back there. And now we are back down to a more normal 18.19. I mean, it's still above your traditional normal, which is 14.15, but coming down in a nice way. So hopefully you guys are able to benefit from those volatility increases to make a bunch of money on some of your wheel trades, especially, man, when they give us some of the easiest companies in the entire market, like we've been talking about on the channel recently, right? When they give you some of the easiest companies in the entire market to sell puts on, guys, it's like you got to take those opportunities. If you can't sell puts and or buy names in big tech or even just do it on the indexes, like what can you actually do it on, right? Like if we can't be buying some of the highest quality companies in the planet during 15, 20, 25% pullbacks from their all-time highs, when the valuations make sense, when they get short-term oversold, when the VIX is high and you can get ridiculously low strike prices for your short puts, like what can we actually sell puts on at this point in time, right? The answer is like nothing. If you can't do it on big tech, then you're going to struggle to do it on anything under big tech that you have lower conviction in. So please keep that in mind. Moving on next to our gold trade right here. So gold, not looking too bad, man. Gold's been having a decent week so far, but a little bit slow. That being said, guys, we're still trying to go for the breakout, right? So I'll remind you what we were in, just in terms of context. Daily downtrend was your weekly higher lows being set by the bulls. We came very close to the 12 EMA. Then the daily bulls were able to recapture this breakout. And then we came back, you did the good old back test, which was some swing trade entry longs. Very nice. And the swing trade entry longs, you are going for expansion into the previous all-time highs because you have not lost the bullish leaning bias of this weekly uptrend. Yes, the monthly timeframes are overbought right now, but when you don't lose the medium-term timeframes, the bulls still retain control. Now, they had to do this in two steps, right? Retracement, you're expecting them to just go from long from here, but they took their time and now they're kind of doing it in two steps. But the clearest time frame for me remains the weekly time frame overall, to where you get a higher low. You now still have your short-term time frames like the daily. So if we're positioning on gold, there's two areas for a stop loss. Well, if you entered the trade lower, you could have got a very nice stop loss below here. But now, since the risk reward is not equidistant, right? If you enter here and you put a stop loss, below your true low, which is the weekly lows, and your target may be the all-time highs, look at this R&R ratio. It's only 0.93, right? So sadly, because you are not getting the best entry, right, you cannot use that as a stop loss. You would have to go for the tighter stop loss area, which would be below the creation of the new daily uptrend, below this guy right here, around 4,000, yeah? And now you still have okay risk to reward, but it's getting worse by the day, right? So we were kind of talking about this breakout trade long from here. So hopefully you guys are able to position, but right now gold is not looking too bad overall. We'll see what happens though, but definitely trade this one with a stop loss because you never know, right, when this monthly move is going to finish. So don't get too greedy. Trade your stuff with a stop loss. At least that's what I'm doing right now. Bitcoin and Ethereum still very soft, guys. I mean, Bitcoin's coming up in a resistance again. 94,000 at about 88,000 is your resistance mark. Clear daily downtrend. This bounce size so far is extremely soft. You're going to need to give me way more than that. Because right now, guys, I mean, let's just be honest, right? The bounce size is pitiful, right? Right now, it's like a 25% bounce. So this guarantees absolutely nothing. Bitcoin can roll over once again. I'll remind you where we are. We are below the previous support area, which is currently now resistance. So you can easily break down lower. The weekly timeframes are in control by the bears. The daily timeframes still have not been reversed towards the bulls. If you want to be sure that this is your actual true low, you need to give me a daily uptrend, right? You need to give me a daily uptrend. Then the bulls are going to have to put in a tremendous amount of work on this weekly to reverse that weekly time frame and then start getting a bit more momentum in the monthly time frame as well. This is a huge retracement from the top, guys. A huge retracement. Usually, if you're long, at least short-term long, right? Not talking about super long-term, but short-term long, you do not want to see them come below a 786 retracement. It just kills all the momentum, and it leads you to understand that the probabilities of just doing this are pretty much off the table. If anything, it's going to be a slow grind, recapturing the daily, then they have to recapture the weekly time frame, which is arguably not the problems that we had when it was a shallow retracement or even into down here into the 90 section. But you break down there, sure, you tag the 26 EMA, which is a nice longer term buying opportunity for Bitcoin, but short-term swing trades right now, very, very dicey. Moving on to Ethereum, same concept on Ethereum, right? Big sweeping daily downtrend. Everybody knows that. The bounce size right now is quite soft. It's only a 35% bounce right now, so it doesn't guarantee anything. You're coming back into, well, they're using it as support stale, I guess, right? But I mean, the momentum is very, very low on these names right now. Weekly downtrend. So number one, first thing you got to do, give me the daily uptrends back. I mean, first thing, recapture the moving averages, right? Give me a nice push, recapture these EMAs, give me a daily uptrend. Then we will take a look at the size of the weekly bounce, see if we can recapture the weekly time frame, and then we can say, all right, maybe the monthly bulls have a chance here at, getting some of these longs going. But if you guys are thinking we're going to hit all-time highs by the end of the year, it may just be off the table unless Bitcoin and Ethereum put in some of the fastest rallies that we've ever seen, right? It's kind of off the table. So longer-term positioning on Bitcoin and Ethereum, yes. But as I said, longer-term positioning, right? Because right now, if you're trying to call this true bottom, well, I hope you're trading with a stop loss because you have no confirmation, right? No trends have been changed. Your short-term bears still control these. And in terms of the retracement sizes, they are quite deep, guys. It's a pretty big retracement, right? Over the 618 on Ethereum. So you know that momentum definitely doesn't favor the pure V-shaped recovery like this, but at least it's a little bit of a start. So longer-term accumulation, yeah, I'm a fan. So all you guys out there trying to play MSTR, trying to play BMNR, things like that, right? Sure, it's good times to position for longer term positions if you're willing to hold for the recapture of the levels over time, but short term, right, it could still be very bumpy. And I hope you guys are not expecting this on BMNR in the short term, and you're not expecting this on MSTR in the short term either, right? It's going to be progressive. You got to do these timeframes one at a time. So crypto's still looking extremely soft. That sell-off was very, very big, and it will probably take a long time to recover, but I am still bullish on crypto in the long term myself personally. That's it for your overall market rundown. Hopefully you guys enjoyed. And now let's dive into some of our big tech names, shall we? All right, so big tech is one of the most interesting trades, guys. They're presenting some of the easiest trades. We do not need to focus too much on some of the very hype and some of the volatile names. If you guys are just looking for the easiest trades in the entire market, some of the easiest trades can be had in big tech. You guys know I don't really do day trades on the channel for you guys, but what I do are longer form swing trades and longer term position trades as well that take weeks and months and possibly a few quarters to really get the big lift. And we're going on this channel for the big moves, right? The last time we went for a big move on Apple was down here. Apple up here is a very greedy long. You are into weekly overbought conditions, and daily, although is in a very nice daily uptrend right now. Just look at your time frames, right? The monthly is very extended from the 12 into overbought conditions. The weekly is very overbought on the RSI and somewhat extended from the 12 EMA. And the valuation right now is a little bit expensive. So if we're trying to buy Apple call options or leap call options up here, maybe they'll work, but you're not getting the best risk to reward entry. That being said, the Apple bulls do control the timeframes right now, is looking very good. Your higher lows are here, 265. So any move lower, looking for a new higher low for further trend continuation. Eventually, if it's Apple's turn to consolidate, then you'll be just looking for a weekly higher low, possibly coming down to the 12 EMAs on the weekly and possibly doing a bit of monthly consolidation, which would not be too bad. Apple right now, the valuation is a little bit extended, so I'm not buying Apple up here for the long-term portfolio, but I am holding all of my Apple shares. They should be having a good Q4 due to the iPhone 17 release. AMD is the opposite, right? AMD arguably was a very greedy long up here, and that's what I was saying. I was saying, guys, AMD, when we positioned, was here on the pullbacks into the EMAs, right? Now, what's happening again? We're getting the pullbacks into the EMAs. Sure, they didn't fill entirely the OpenAI news gap, but we've pulled back very nicely from the highs, and we also have new information. We have the recent earnings and Lisa Su's improved guidance. So that being said, AMD right now, around 200, it's under a 1 peg. It's under a 1 peg, low 30s multiple, and a 7.5 price to sales, which is very attractive. The same thing cannot be said about AMD when it literally was all the way up here, right? This is a very nice discount, 25% from the all-time high. So we're getting a good discount on the valuation. We're getting a good discount on the technicals. We are no longer weekly overbought. And the monthly as well has consolidated a little bit, not quite coming down the full way, but still, this is the time. I'm not calling this the bottom, but if we're looking to accumulate further positions, shares, or leap call options with a end of 2027 time horizon, right, for the expansion of the business, this is the area where we want to be building those trades, not FOMOing at the tops right here, right? So I built some of the AMD positions down here. I'm adding a few more shares right here right now. Well, I started accumulating shares back here, but the last time was here. And now, moving forward, is going to be here on these big discounts. So AMD, I still like it a lot. Valuation makes sense. The technicals now make a lot more sense as well. But if you go for a more full retracement, because it is a daily downtrend, let's be honest, right? If they give it a little bit more, your next support area, 186 down to 180. But this one has been so fun to finally sell short put options on. I haven't been able to sell short puts on AMD since down here. But now they're giving us really good premiums to be writing some down there. So maybe you guys are taking advantage of some of those. I'll show you some of that at the end of the video. Moving on to Amazon right now. So Amazon pushing higher 3 days in a row. Very nice. But the daily bears control this chart right now into resistance, which is 240 down to about 227, right? So pulling into resistance, Amazon down 16% from the all-time highs. If we can't be buying Amazon after those ridiculously good earnings, and they were ridiculously good, we cover them on the channel, right? Super solid earnings all across the board in around 220 after those earnings, and in light of 2026 guidance, you are trading under a 34 price to earnings and a 1.4 peg. This is another example of a chart that is very easy. Very easy. The valuation makes sense. The technicals make sense, right? We were a bit stretched here. We've pulled back to the EMAs, pulled back into our support range, which was 220 to 210. And additionally, the monthly, well, it got started there, but now it pulled back, gave us yet another back test of the good old 12 EMA. Again, right? No monthly newer lows, right? This is still the same monthly move. It's been very wild, very volatile, but Amazon's still one of my favorite buys in the market for leap call contracts, end of 2027, and possibly, and this is the only time, guys, after this week, I'm going to stop talking about leaps, right? Because I know that, you know, people in my Discord know how I trade leaps and know how to manage their account sizes. But the reason I don't talk about it like this on the channel is because I don't want you guys to get the wrong idea. And if you're working with, like, you know, limited amounts of capital, you just load up leaps on everything with short time, right? Because you guys think, well, I'm not going to go 2 years, I'm going to go 6 months, right? No, there's a method to all of this, right? You got to put a lot of time on the contracts, 70 to 80 delta. They're not for everybody, right? So that's why I don't give you guys, I'll show you guys in the portfolios and whatnot, but I don't give, you know, trades like this because I don't know how greedy you guys are going to be with them, right? You got to you got to play the middle ground, right? You can take the trades, but you can't oversize the trades. That's just not very prudent. But Amazon, phenomenal play for some leaps in my opinion, but also a phenomenal play for some long-term shares. Moving on to Google right now. See, this is an example of something that's not easy anymore, right? Google back here was easy. Nobody wanted it. There was bearish narratives against it. The risk to reward was very good. It was trading a 15, 16 multiple back here. Now, well, it's not. Now, everybody wants Google. All the timeframes are overbought, weekly overbought conditions, monthly overbought conditions. So is it a good time to start a position on Google up here for some call options or whatnot? Let's be honest, guys, right? Can it still work? Sure. Is it a good risk to reward trade? The answer, once again, is no. But I was saying that back here, and I was saying, you know, it's a very greedy long. It can work, but it's not a trade that you want to replicate all the time because sometimes these will work. But guys, this is a legendary move on Google, right? This is some of the fastest appreciation that Google's price has ever seen. So if you're expecting this to happen on every single company that you keep trying to play the greedy breakouts, you might just be disappointed, right? This is like a generational move on Google. So it's a one-off type of thing, right? And you don't see these one-offs too often, but they're very nice when they happen. Overbought conditions on everything right now. If you pull back, the bulls are in control. Anything above 271, looking for a new higher low for possible further trend continuation. But like I said, you're overbought on the daily, you're overbought on the weekly, and on the monthly too, you are now overbought as well. So everything is overbought I'm not selling any Google shares up here because I'm holding it for the very long term, and I just fund my accounts with new money. So I do not need to trim Google here to buy something else. But if you want to do that, you can definitely trim. I mean, I always hold my stuff for the long term. I don't really trim unless the fundamental thesis changes. But if you wanted to trim this and reinvest it into Meta or Microsoft or other names that are now low, you can do that. It's not the worst possibility. I wouldn't be selling all of my Google shares though, no way. And that being said, around 290, you guys know the drill. Now, right, at 323, it's 10% higher than here. You're almost at a 30 multiple and a 1.9 peg. So now Google went from one of the cheapest stocks in the market to arguably one of the more expensive ones because the rest of big tech pulled back. So you see this rotation that's happening? We played a lot of Google down here, we crushed it. We played a lot of Apple down here, we crushed it. Now we take those gains, right? And then we rotate them into some names that are now low. Names that were not low before. Names like Meta that were high before. Names like Microsoft that were high before that are now low. Names like Netflix that were high before, now they are low. Names like NVIDIA that just recently were high and now they are low, right? So rotating between these Mag 7 names, some of the easiest money that you guys can conceptually make in the market. Just watch those rotations. Moving on to Meta right now. Meta, daily downtrend. Now the bulls putting in a very nice engulfing move, man. Lower highs right there, 634, engulfing move. Now we're talking. Now we're talking on Meta, right? Buying some of these lows is very good for the longer term portfolios in terms of shares or for some leap call options because you want to be buying daily oversold conditions, especially when they rarely happen. Last time was in tariffs and the time before that was 2022. But short-term trading, very tough. Long-term trading, easy to build positions there because you got a lot of time, right? Short-term trading, you got to wait until they confirm the time frame so you can actually get a defined stop loss area. If not, sometimes, you try to pick the lows and you just get unwound a little bit more into deeper support. But really nice move. We're going to look for the bulls to change the daily uptrend right now. Nice move. They got a lot of work to do here on the weeklies as well. Downtrend, so you're going to need more of a bounce, right? You need the bulls to do a daily uptrend change. Then make some progress on this weekly. Give me a 50, 61% retracement, possibly back up to here, reset the weekly timeframes, and then we can say, yeah, that's the monthly cycle low, at least this drawdown cycle low, and you're going for it, right? But I was saying down here, man, you're looking for the monthly higher lows. Great time for shares, great time for leaps. Not so much to call the absolute bottom during peak volatility for short-term call options when you're paying excess premiums for IV for like 30 days out or whatnot. But we don't talk about that stuff on this channel at least, right? All we do is longer term position trades, identify mispriced assets when the technicals and the fundamentals line up, right? Below 630, you guys know the drill. It was below a 20 forward price to earnings. It was a 1.63 peg, closer to 600 or under 600. This is like a 1.5 and this was under a 20. Phenomenal buying opportunity for Meta overall. And you know what's funny about Meta, man? Meta was up 4% today, yeah? This is sometimes how stupid the market is, right? I'll just say it as it is, right? It's how stupid the market is. This is all about determining signals from noise, guys. So your best ability as an investor and trader is not how much you can do fundamental analysis nor technical analysis. Your best thing that you'll ever be able to do is be able to derive what is short-term noise, not only in the market, but in individual stocks, right? What is noise and what is an actual signal that fundamentals are changing, yeah? This was no fundamental change. You know what's funny? The market sold off Meta, yes, because of the tax expense, but mostly because of the CapEx raise and the expense raise by Mark Zuckerberg. Why is Meta up in the last few days? Because they're spending money on Google TPUs. Does that make sense to you? The concerns was surrounding the fact that Meta was spending a bunch of money and people were not sure why they were spending that money, even though they say it's for AI, right? There's a bit of cloudiness surrounding that. And now they say they're going to spend more money and the stock is higher. Does that make sense to you? It just goes to show how sometimes the stupid market is, right? So, but it provides us great buying opportunity. So it is what it is. Meta's still one of my favorite buying opportunities down here. On to Microsoft. Microsoft 0.63% to the upside. This one is the same thing. Daily oversold conditions. When does it happen on Microsoft? I don't know. Let's go look. Here, that was the tariff bottoms. Here, August, that was some of the bottoms back here. Let's go back in time again. Oh, October 2023 lows. That was, once again, very close to the bottom. So should we be buying Microsoft when it's daily oversold conditions? Yeah, not with swing trades, but possibly some leap call options and possibly some shares. And especially you guys know that I've been saying on the channel for 4 or 5 months, if we get back into the 12 EMA and back test when historically it's been good to buy Microsoft on back test of the 12 EMA, should we be buying Microsoft right here? I don't know. You guys tell me, right? Can it go lower? Of course it can go lower, but this is the area where we want to be accumulating 12 AMA down to the support below us, which is 452 down to 427. So I am buying leaps. I am also buying shares, right? That being said, the daily bears are in control of this chart. You will need a nice bounce. If the bounce size is too soft, you might just unwind and go test that area of support below. Weekly uptrend has been lost as well. So now you're just in very casual monthly consolidation, which we've been waiting for a while. I've been very patient. Now that it's here, I'm buying some shares at 470, finally under 30 forward price to earnings, a 1.66 peg, which is a lot lower than we were at 550, man. So now we're getting the discount on Microsoft. Now's not the time of being scared. Now is the time to be greedy, essentially, on some of these easy big tech names, right? Like I said, right? We played Apple down here when it was a buy. Now Apple's no longer a buy. We were waiting for Microsoft to come down. It came down. They gave us Meta as an additional gift. Now we can play Meta as well, right? We can't really play Google anymore. We can play Amazon. We can play Meta. We can play Microsoft. We can play this next name, Netflix. I've been waiting for a while as well, additionally too, right? So yes, daily downtrend, and the bulls are looking a little bit soft right here. We do not have support much until this area down here, 100 roughly, down about the mid to low 90s is that next support range. The weekly time frame is in the bears control right now. So I'm not saying this is the bottom. I'm saying this is a nice area to start building some shares, which we've been patiently waiting for since here. Now we're into the 12 EMA as well. We are sold off from the tops by a wide margin, guys, 22, 23%, right? If you've been waiting for discounts on Netflix, around 105, they're trading at a low 30s multiple. Up here, it was above 40 towards 45. It's a 1.62 peg. Now we have manageable valuations on Netflix as well. So there's so many easy buys. If you have a long-term time frame, both for your call options and also for your long-term shares, a lot of these companies, man, should be some of the easiest buys. Just look historically, man. They're some of the easiest buys that the market ever gives you, right? A market ever gives you in terms of the context of the last 10, 12 years. Moving on to NVIDIA right now, same concept on NVIDIA. Everybody forgets everything that happened here during the GTC conference. Everybody forgets how strong NVIDIA's earnings are, the fact that they're sold out for the next year in terms of supply. Everybody forgets the raised guidance for NVIDIA. Everybody just focuses on the day-to-day headlines, right? And keeps questioning the AI trade, thinking one day it's alive, one day it's dead. One day it's alive, one day it's dead. Well, now it's time to kind of choose your side, right? And if you're on team AI, well, this is definitely a buying opportunity in my opinion. Although we do not have the daily uptrends, we bounce out of support, 172 down to 165. Weekly consolidation as well. Unwound the weekly uptrend for the first time in a very long time, which means that we're in monthly consolidation phases. Here, down to the 12 EMA, 170s down to about the 155 is where I'm positioning for NVIDIA. Longer term shares, I think, are a very attractive proposition right now, right? At 177. I mean, just take 10% off of this. You're trading at a 25 multiple right now, arguably close. And like a 1.1, 1.15 peg, it's very cheap for NVIDIA, man. So if you're still a big believer in NVIDIA, after it consolidating for the last, 4 or 5 months at this point in time, cooling off the higher time frames, giving us nice monthly consolidation, giving us phenomenal earnings, giving us a phenomenal GTC conference, well, maybe you guys just want to see through all the noise and take some longer term positionings overall because the valuation and the technicals now make a lot more sense. Well, moving on to Tesla right now. Moving on to Tesla, trying to go for the daily uptrend break, encountering resistance right here, 427 down to about 416. We will see if they can get it done, but it's been very choppy recently. Weekly right now is still in consolidation. Weekly is a downtrend. The bulls are trying to go for it, right? But nice support bounce here, guys. 405 down to 380. This is a nice little region right here. And even Tesla is just monthly consolidation, right? Monthly, moving nicely. Very bullish moves here in the past few months. Nice consolidation range. So Tesla is not looking bad for a possible breakout. I mean, it is big consolidation here. I'm not personally doing Tesla right now because I think there's a lot of other companies that have a bit more manageable valuations. I still have some of my Tesla shares, guys, but I'm not adding any more up here. I'm just holding the Tesla shares for the long term. It's tough to get behind the valuation in the short term. If you focus on the short-term car business, I'm holding the Tesla shares for the longer term. So I realize it's a multi-year plan for Tesla. I've kind of just discounted their entire car business for now. And now it's going to be all about expanding robo-taxis, expanding Optimus, expanding the energy business, of course, et cetera, et cetera, et cetera. But you Tesla bulls, you know that. And for those of you that are not interested in Tesla, well, I could probably never convince you of that either, right? So Tesla remains one of the most polarizing stocks in the entire market. If you're in it for the short, if you're looking at the short-term negatives, you would never think that this is a buy. You would probably be short. But if you are with the long-term positive, you probably are sticking with your shares. And perhaps adding some swing trade longs up here, but I am not. Moving on to Palantir right now. Palantir up 0.8% today, still in the context of a daily downtrend. The bulls looking to put some space between the lows. We'll see what happens. Support is still down here, 148 to 139. I cannot say this is the bottom without them getting the uptrend back. We also lost the weekly uptrend too. Nice weekly uptrend back there. Well, this entire time pretty much. And now you lost it. So now you got to do two things. Number one, give me the daily back. Number two, give me the weekly back as well. That takes some time. Overhead resistance, 185, then about 170. Selling put options on Palantir if you are a fan of accumulating some shares here. If you are a fan, I'm not forcing you guys to do anything because you guys know the valuation is stretched, but you also know that Palantir is kind of a one-of-a-kind company with a very beautiful story behind it and very good use cases as well in terms of their productivity gains they bring to a lot of companies. So if you're a fan of buying the Palantir pullbacks from the top to where we were, 30% pullbacks, decent entry proposition off of a nice technical sell-off in my humble opinion, cooling off the monthly timeframes, coming down here, almost coming into the 12 EMA. So selling put options down there if you are a Palantir bull and you're looking to maybe get back into some shares that you sold here and looking to hold them for the long term, not the worst proposition. But like I said, I'm not forcing you guys to do anything. I would be remiss if I said that Palantir is a cheap valuation right now, right? So just take from that what you will. Moving on to SOFI right now. SOFI, easy money, man. SOFI, I've been talking about this for the last few months. Easy money buys for SOFI. They may not play off in the short term, but long-term thesis has always been very clear on SOFI. Around 27 or lower, they were trading at a 1.1 peg, a mid-sevens price to sales, which is very good. They had phenomenal earnings, which we covered on the channel, etc., etc., etc. Coming back down, technical test here of 25 down in low 20s. Easy area for some accumulation. The same thing we've been saying for the past few months. Every time we come down into there, I'm selling some put options, right? Not a bad area also to accumulate possibly some shares if you guys aren't fully built out yet. But now the bulls putting in some work, right? Very nice move, almost 3.4% on SOFI today, fully engulfing, now into resistance, 30 down about 28. So the reason I show you guys the short-term trends is just to show you who's in control, right? And how long consolidation phases can possibly last. If you get another move down, because now we kind of sacrificed the weekly here, we flushed it, right? If we get stuck here, well, you guys know the drill. I'll be selling puts down there, but also it was a nice opportunity, like we talked about last week, for some leap call debit spreads, because leap call options are very expensive on SOFI. Your break-evens will be very high, even if you are at the money or in the money. And out of the monies, I can never recommend on the channel. Out of the monies are risky, even though you can make a lot of money on them, right? Out of the money call contracts are sometimes risky. So whenever the IV is high and I can't find good leverage at the money or in the money, usually I'll go for call debit spreads in terms of leap call debit spreads, right? So not looking too bad, just a nice monthly pullback. If you keep going, consolidation, nice area to buy SOFI. Two last ones right now, Uber and TSM. So Uber, in my opinion, great buying opportunity here down as well. This daily downtrend, very clear, right? We were watching for the break of this the last few months. You remember me talking about this the whole time. The upswings were getting smaller and smaller and smaller. And then we unwound this after earnings. And I said, uh-oh, that's a weekly downtrend and possibly the start of monthly consolidation. You got it with last Thursday's breakdown. And now we are finally back into the area that I've been patiently waiting for. Selling put options down here, buying some shares down here in around the 83 range. You're now at a very manageable 23 forward price to earnings, a 1.5 peg, and a 5% free cash flow yield. So a lot better metrics than we had up here. And I will be buying this dip. Also, we are daily oversold on Uber. Has it usually been a good proposition to buy Uber when it's daily oversold? I don't know. That's why we look back in history and see, is it a good time in a whole area to be buying Uber in these areas? Not saying it's the true bottom, but buying Uber in these areas, has it been fruitful or fruitful endeavor? The answer quite simply is yes, especially when you back it up with a monthly retest of a nice support area, 81 down to 77, big previous resistance, and now just coming in for the monthly higher lows, possibly to look for the expansion over the next few quarters. And lastly, TSM. TSM also was a daily downtrend. We know that. Nice bounce right now. We will see if the bulls can get it back. They obviously, they created a lot of space here, 267 off these lows. It has been a weekly bearish bias as well. Weekly downtrend, which just means that monthly consolidation was underway. Didn't quite get to our targets, which is why I'm saying, right? If they don't get to our targets, there's many other companies that do get close to our targets. But TSM, I was looking for a little bit more. I would have preferred to see 250, 240 maybe, being able to sell some short puts down there or maybe accumulate more shares down there. They didn't give us that much of a discount, not yet at least, right? TSMC is still a very solid company though, around 290. The valuation is not bad right now in terms of just nibbling on some longer term shares, but we will see if this consolidation phase finishes sometime soon. If you want to know when the lows are set, give me the daily uptrend back, and then you'll know, all right, the weekly lows are set, and now you might be looking to recapture the weekly time frame, and maybe that'll be the low of the monthly time frame as well. But TSMC never really gave us the confluence between fundamentals and technicals, not like other companies have, right? So TSMC for me is a nibble up here for long-term shares. It's a bit rough for in terms of leaps, right? If I'm looking for leaps, you can make an argument for leaps on everything, but that's not the point, right? I'm looking for the best opportunities on leaps, which are good technical setups and fundamental setups at the same time. TSMC is giving us a fair fundamental setup, but the technical setup is not the best, right? I would like to see them come back a little bit more than that off their highs, only 13% off the highs, whereas other companies are down 15, 20, 25 into big technical levels and at somewhat better valuations than TSMC has right now. So shout out to them. I'm holding all of my long-term shares, and you can even make an argument to nibble for a little bit more, but not doing any short-term swing trades or call options on stuff like that. That being said, that's everything I had for you guys for the overall market rundown. Hopefully you enjoyed. So I'm giving a lot of context for a lot of these positions, right? Especially rotating between big tech. I've shared a lot of this stuff with the Discord members. I've been trying to kind of show it to you guys through the YouTube videos. So hopefully you've been able to take the hints. Obviously, I can do a lot more in our Discord than I can on the YouTube channel because I know a little bit more about people's risk tolerance in there and, you know, their penchant for, you know, how they want to structure their portfolios and stuff like that, right? But overall, in the YouTube videos, I tend to give just overall guidelines and just overall things that you guys should be noticing, right? Good trading habits, be patient for things, but then when things come, look at historical standards, look at RSI levels, look at support areas, try to maximize the confluence of the technicals, but also line it up with a good fundamental valuation, and you usually end up with a winner. It doesn't mean that you're going to clip the absolute bottom on something like Microsoft, and it's only going to be up from here, right? It's a range. And if you're building stuff for the long-term swings, right, or long-term shares, you should be happy that you're buying the lower end of a range rather than FOMOing the top end of a range, right? There's ways of playing this stuff. There's different nuances to it, of course, as well. That being said, that's everything I had for you guys for the overall list rundown. Now, let's dive into some of the biggest gainers and losers of the day. You know what? Actually, let me do a recap of the 20 names that I was looking at last Monday. If you guys haven't seen that, I went through most of this list yesterday, some of the themes, some of the neo cloud providers, et cetera, and some of the names yesterday. So you guys should have a pretty good impression with yesterday's video, where we stand on the biggest gainers and losers of the day. So what I'll do today is just do a rehash because we are still in consolidation mode in the markets overall, and there are still some good discounts. So I will remind you of 20 plays that I'm looking at very closely to accumulate some shares or trade a bit more often. Some of them are core positions. I'll start off with the core positions, and then I'll go to some of the growth names that I kind of identifying to, you know, add a little bit of a risk on there. So some of the core positions, guys, we've went over them on the channel. SPGI here, in my opinion, phenomenal company. It is a buy. Fundamentals line up with the technicals, very solid. We can look at a stock like Mercado Libre. Mercado Libre, arguably one of my favorite companies in terms of international monthly consolidation. Phenomenal valuation down here at 2,000, but you're going to have to hold through a bit of the washing machine cycle right now. Mercado Libre has had 5 or 4 declines, 5 as a matter of fact, declines of 20+% in the last year. So you guys should be used to the volatility by now on Mercado Libre. It doesn't detract from the fact that this is one of the fastest growing tech companies and e-commerce businesses on the planet right now. If you take a look here, look at this EPS growth. Look at the EPS growth over the next few years and look at the revenue growth, right? So Mercado Libre is front and center on my buy list moving forward for my core positions. Visa and MasterCard need no introductions. Very good valuations. It's very rare, guys, extremely rare to find Visa and MasterCard trading at such low valuations. They are some of the lowest valuations. They've been consolidating for a year at this point in time. Good opportunity on Visa, good opportunity on MasterCard to add some for the long-term portfolios. Netflix, we already went over. You guys know my thoughts on that, but I figured I should include it as a core position. Booking.com, also very nice consolidation period. We did the valuation after earnings. Under a 20 forward multiple and a 1.16 peg, phenomenal free cash flow yield. Some of the lower valuations that you've seen on Booking Holdings in a while. It's a long-term hold for me. SOFI, we talked about already. Phenomenal buying opportunity down there. We talked about it, but I'm just running through my core positions, my 20 favorite companies right now. Meta, also, we talked about it earlier in the video, just rehashing. NVIDIA and AMD, some of my favorite buys in the market as well, right? You don't need to look too far, right? The easiest plays, guys. I'm just telling you guys the easiest plays conceptually. We don't need to go into all this other stuff right? We can go to this other stuff afterwards. I mean, shout out to companies like Reddit as well, which we did bring up a few days prior, right? It was a good buying opportunity. Excuse me, Reddit all the way down there. I know I'm jumping around right now, but I'm just trying to make this video short, right? Around the 180s, we covered them after earnings. Reddit was a good buy. It was a good buy in the 200s after their earnings. It was an even better buy at 180 off this monthly consolidation leg. Super easy entry, technicals and fundamentals lined up once again. Reddit, you know, a few other things, but we don't need to go too wide on this list right here, right? We don't need to go too high beta either. Well, you know, but some of the core positions, Uber, coming back to them, Uber, solid, you know what I mean? Amazon, solid down here. We talked about this one already. Airbnb, solid. We talked about this one in the teens, right? Teens, still a good buy, multi-year worth of support level right there. And after earnings, we did say that they had a pretty cheap valuation as well. I'm just going through some of the easiest plays conceptually that we can make in the markets. And lastly, Microsoft, right? These are some of my core holdings that I have in my long-term portfolios, okay, that I'm looking to build upon during this consolidation phase. Now, some of the other growth companies that we could possibly talk about, although we've talked about many of them, many growth companies so far. We talked about the neo cloud providers. We talked about some of the energy plays, but here are some of the growth names that I'll be looking at and still looking at and adding to for some of my long-term positions for some of these growth names. Number one, Robinhood. Robinhood, we talked about, right? It was a nice confluence down here in the lower 100s. We're getting close to the 12 EMA, so you want to start buying. They're cooling off the monthly timeframes after their earnings, right? We covered them. We said they had very beautiful earnings. Robinhood's been coming down because of the growth sentiment, but also because of the crypto sentiment. They do a lot of crypto. Around 110, we were finally back below a 2 peg. It's not cheap, but it is a high growth stock, so sometimes it has higher multiples. We were very close to oversold conditions, so it was an opportunity to nibble. Start nibbling on Robinhood. If ever you sold up here and you were looking for re-entry, not a bad chance to be re-entering Robinhood down here, right? We were talking about Shopify as well. Shopify was a great, we were talking about it after up here saying it was a little bit expensive at this point. Around the 140 mark, it was cheaper, not cheap objectively against some of our other names, but Shopify, one of my favorite growth plays, right? Nice technical pullback. We were looking to sell some put options possibly down here or build some shares. We are now higher, right? Shopify is not a bad buy right now. You missed some of the biggest declines, but Shopify is still one of my preferred growth stocks moving in the next 2-3 years. Phenomenal fundamental expansion for this business overall, guys. Let's not get it twisted, right? Now, the EPS expansion is very good. The revenue expansion is very good, but you are paying a premium for this company. We could talk about other names like cybersecurity names that have been consolidating. CrowdStrike's a little bit high right now for me, but one that's not is Palo Alto Networks. Coming beautifully into support right now, 185 to 177. They had their earnings the other day. Maybe we'll cover them on the channel. I know I haven't been doing many earnings recently, but that's because we're just getting so many good deals that I focus more on the charts right now. Palo Alto Networks, oversold conditions. If you're looking for a top tier cybersecurity company, maybe you're interested in this one. Monthly pullback and a support. Although it's not a cheap company as we derived, right? It is one of your biggest and fastest growing companies in cybersecurity overall. They have a dominant share. Them and CrowdStrike have a dominant share. So if you're looking for a pullback, if you're looking for a position on Palo Alto Networks, they're down 20% from their highs. Not too bad at all. Another company we were looking at recently, but unfortunately has now mooned, right, is New Holdings. New Holdings looking good for a possible breakout here, right? So this one, I was a bigger fan of adding to it down here with some short puts or some shares. They never really gave re-entry opportunities, but New Holdings, super solid. I will remind you of our 2027 base and bull cases, right? At the base case scenarios, right? At 2027 forward estimates, right? Very solid. You're looking at mid-20s. And in terms of 2028 estimates, base and bull, you're looking at $30 worth of upside. There's still a lot of meat left on this bone right here. So even though we are extended somewhat in terms of the price off of some of the lows recently, is it a good buy fundamentally over the next few years? The answer indeed still is yes for me. Another company I was telling you guys about, Grab. Grab, I'm starting to build a position into right now. Now that we have pulled back, we've gone for the full monthly retracement, right? It's been just a monthly consolidation period, retracement period right now, right? On the markets, very solid entry around the $5 for Grab. They literally just had their earnings. Although the short-term timeframes are not looking the best right now, it's bear control. We had daily oversold conditions. We had the monthly pullback. It's an accumulation trade for the next few quarters, the next few years. So I'm building a position on Grab overall, decent fundamentals, and a dominant landscape in the Southeast Asian markets overall. Another stock that I'm kind of rebuilding a position in right now is HIMS. HIMS for some short puts or for some leap call debit spreads. The stock is trading at literally a 3 price to sales. Some of you guys may not like HIMS, and I get it, but we're coming out of daily oversold conditions. Daily MACD is crossing right now, so maybe they start reversing the trends, and maybe they start coming back a little bit on this massive weekly sell-off. But even if we don't do it in the short term, is it a good area to be building? I do think so. You may not like it, but it's something that I'm personally thinking of playing. e.l.f. Beauty, same concept, phenomenal company, but came down because of tariffs. Again, right, the tariff impact, and it also came down because it's a very tough landscape right now in cosmetics. So the last time we bought e.l.f. Beauty was here with the same long-term thesis as we would be buying here. Nothing has changed. It's just consumer discretionary spending has not been easy for a lot of these companies recently. This is a multi-year play for me on e.l.f. Beauty. So the last time I bought was here. I clipped out a bit of shares up here, and I'm going to rebuy. Same thing I did on HIMS, by the way. HIMS, the last time I bought was here at 27. I clipped out a bit at 2x, and I'm rebuying some of my HIMS shares. Same thing on e.l.f. Beauty. I'm rebuying the shares that I sold, although it may not be the bottom. We could come down into 60s. It's an accumulation period overall. Not that bad, maybe even for some leap call debit spreads through end of 2027. You got to give this one some time, but one thing's for sure, man. The valuation on it right now is very cheap. I mean, it was cheap at 92 when we did it after their earnings. So imagine how cheap it is at 72 right now, but you got to have a long-term thesis because the short-term bears are in full control. It doesn't look pretty, right? But it's a nice accumulation range until we start recapturing some of that momentum, similar to what happened right here, right? It took a while, but once it gets started, right, well, then usually e.l.f. can run. It's one of the fastest names that can run in terms of a consumer discretionary trade right there. Iris Energy is one that I am building into a longer-term share position right now off of this beautiful pullback right here, 38%, although we do not have the new daily uptrend confirmation. I'm not swing trading this one, right? We don't have the weekly either. It's a weekly downtrend and monthly consolidation, but I do want to be a buyer because now we have more information from their earnings, which is all the deals and some of their construction timelines, right? Iris Energy, CoreWeave, Nebius, CIFR, a whole host of names. My personal favorite is Iris Energy just because of their vertical integration, but I highly recommend that you guys do your own homework between them and derive what is your possible favorite play. I wouldn't suggest buying all of them. I would suggest buying your favorite company as opposed to the shotgun approach of buying all of them. But Iris Energy, I will be building into it, right? As we did derive that even after their earnings, the valuation multiples, guys, were not that bad in terms of 2026 forward estimates and all of the stuff that they have in the pipeline overall. And last but not least, some of the energy plays, of course. So whether it's Vistra, strong utilities name right now, pulling back from the highs, nice technical area, and also very nice valuation on a forward basis for this company right now. So the technicals, the fundamentals line up. Very possible, nice move on Vistra, but some of you guys may not like Vistra. Maybe you guys like Duke Energy. Duke Energy, same concept, nice pushback into some of these ranges. Some of you guys might like Next Era Energy also for some of that expansion. This is looking pretty nasty for an inverse head and shoulders right there for some expansion, although the valuation right now is higher than some of the other names I gave you. I think they're very well positioned in terms of what they have, in terms of wind, storage, solar, et cetera, et cetera, et cetera. A lot of these utilities names looking good. And even a company like GE Vernova, man, I'm a fan of possibly building a position down here at some of these lows, playing the electrification aspect. All this AI is going to need so much power. There's not enough power. So I'm building a bit of an energy focused trade in terms of a, 2, 3, 4 year expansion thesis on some of these names. So those are just a few of these names rather than running through this entire list right here and just running through the names individually. Okay, here's what happened on Symbotic. Here's what happened on Abercrombie, right? I figure I should give you some of the names across this entire list of like 100, 200 companies, the names that I am focusing my attention on. Some of my favorite names, but you guys are free to put your favorite names down below in the comment section in the event that I missed any, or if you want my opinion on some stuff, feel free to ask me down there as well, and I'll provide the best insights that I can. Now, that's everything for your biggest gainers and losers of the day. Now, let's do a quick little portfolio recap, shall we? So in terms of the portfolio, guys, we did a big rebalance towards some very high conviction trades. We closed some losses that we took and we rebalanced and we repositioned some very high quality stuff right here. So you may look at the portfolio and say a few positions are missing, and you would be absolutely right. I'm going to blow this up and I'll explain some of the losses that we took last week. So we realized some losses and pivoted. So I had some short puts going on VST. I closed them in favor of an Amazon trade that I found. Very small loss right there. I closed some Nebius and CoreWeave losses as well. They were kind of stuck in not the worst prices. You can see 72 and 80, but I found some much higher conviction, maybe not higher conviction, but higher quality trades that I would mind being I would not mind being assigned, essentially, some of my higher conviction plays, especially in big tech. I'll show you those right after, right? So we took some losses right there, and then some assignments that we had. We took a loss on Iris Energy as well. We were at 55. We tried to farm some covered calls, and when I saw some beautiful opportunities for share replacement with some leaps, but also for some big tech names, I pivoted. BMNR as well. We were in BMNR. We took a 33% loss. We were in BMNR at 40. And unfortunately, we had to sell last week on Thursday when I found the best opportunities. I'll tell you guys why, right? And BITX as well. BITX, you might remember, I was in this one for like the past month and a half, 2 months, playing the crypto consolidation. We had an average cost of 41 at the time. I made a DCA attempt at 35. Unfortunately, that unwound as well. And we had to take a 36.5% loss on this position as well. However, in terms of the dollars, they were largely offset by one of the closes that we did on healthcare overall on this leap call contract. Total losses realized for last week in this account, $2,632. So you may wonder, well, why'd you take the losses, right? Well, number one, these plays were very high beta. And number two, the crypto names, they came down too much, in my opinion, to be able to recover very quickly. However, we pivoted to higher quality plays that don't come around too often, that we talked about all throughout this channel, or all throughout this video rather. And here are some of the pivots that we made overall in the portfolio. So you'll see a few new additions to the portfolio and a lot of concentration here into very high quality stuff. Number one that you will not see right here is a play that I just closed today to reposition. Amazon last week, we got Amazon the 215 strikes for $4.20 during the Amazon sell-off. We were able to close those today for $1.32, 70% win, and reposition them into the nice AMDs, December 19th, 410. You might notice that although usually I play the weekly contracts, a lot of these are 3 to 4 weeks out. The reason being, I was trying to lock in the volatility and lock in some of these prices for some bigger premiums. So we got the AMD 175 puts today. Huge distance, December 19th, we got $4.10 for them. I also threw in some grabs in the mix, small contracts there, but 26, 27 cents a pop there on the 4 grab contracts. Those are now 50% profitable. HIMS is a new position from today, December 19th, 33 puts for about $1.10. We'll see how those go, but I would not being assigned there. Netflix and NVIDIA and some of the other ones that you'll see, those are the ones that I replaced a lot of the losses with. So Netflix, we got a December 19th 102 put. We got $2.57 for them. If I'm trying to be assigned or keep some assignments on something, I'd rather be assigned in these names than super high volatility beta names. I'll explain why a bit later. Moving on to the NVIDIA's December 19th 155 put. We got those last Friday. We got them for almost $4, $3.85. They're now 55% profitable, so making some good money back there. Rocket Mortgage will likely be called away on December 5th. We've made some good money on that Rocket Mortgage assignment so far, so that'll help offset some of the losses that we just took last week. SOFI, we had 2 trades on SOFI, one of which was closed today. You can see this right here. Last week, we took the 25 strike, or 24 strike rather, for 46 cents. We closed it today for 90% profit overall. So that was pretty good, right? 90% per contract. And now Uber as well. We took this one. You know what's funny? We took this one on Thursday before the absolute big sell-off. Uber was down 2%. Everything else was green. And then that same day, Uber closed down 8%. So I was a bit early on these Uber puts. I will DCA them if needed, but I was waiting for these strikes on Uber. We got 85 cents. These contracts are underwater. Uber's around 83, 84 bucks. We'll see if we get assigned next week, but I would rather hold a bag of these high quality assignments than all of the high beta names, right? So I played the high beta names because at that time, the big tech names were not available. You might remember what happened in terms of the timing of the market overall is that these names, IREN, NBIS, they started moving down quickly. The crypto names, BMNR, BITX started moving down sooner than a lot of the big tech names. So I played those first because the other names were not necessarily available at that time. NVIDIA was still flirting with some of the highs of the GTC conference. Netflix hadn't broken down just yet. Microsoft hadn't broken down just yet. Meta, for my big account, hadn't broken down just yet either. Amazon hadn't fully broken down just yet either at that point in time too. AMD hadn't fully broken down just yet. So I was in the plays that at the time were the ripest opportunities to play some volatility. But when I saw the ability to pivot into some of these names, well, I chose to do those instead, wind them down because I knew that they're going to be very volatile in the future, especially the crypto names, right? And when I'm looking to reposition into higher quality, especially that this account is running, you can see the breakdown, right? We're running margin right now. Obviously, that's going to skew the gains and the losses a lot, right? It magnifies the gains, it magnifies the losses. But you can also see, guys, I'm running like almost half of the portfolio right now in call options. So some of the reasons for the declines, yes, is the roughly $2,600 loss that we took last week, but it's also a lot of the round trips that we've done in the call options, right? So take a look at the call options right here. You know, we have a few call options that I'll explain to you guys. Grab, right? So the $6 calls was an earnings play. They're currently down. We got some grab leaps though. So I got 5 of these contracts leaps. We got them for $1.05 just the other day, and they are moving into profit territory, which is good. December 17th, 2027. Okay, so that's what I repurposed a lot of the capital from. If you're looking where the capital went from the losses, I'll show you where it went. Gold, swing trade long, April, $80 calls. We're down a little bit on that trade overall. We took it, you know, this wasn't done recently. This was done on the back test of gold right around here. Okay, now that we've burned a bit of time and it was more volatile at that time, we're down a little bit on the cost of the contracts. However, decent solid entry and have until April to go for that expansion. Moving on, we are having a Bitcoin trade. This Bitcoin trade I took when Bitcoin literally just cracked 100,000, right? So we made the move into 100,000. Here is where I positioned for the first batch of leap call options on Bitcoin. I still have not DCA'd, but the DCA will be coming. But you can see there's like a $700 loss there. So if you're wondering where the equity went recently, I'll show you, right? So a lot of these call options pulled back a lot from their highs. Sentinel-1, we used to be in profit into these. We are now down about $50, but we used to be a $200 profit running on these contracts overall. TLT has been just stable. I've been considering selling these TLTs for par or break even or a small little loss because I have a couple other opportunities that I want to buy, such as NVIDIA, such as Microsoft leaps as well. Visa, you might remember we were up literally 1,005 on this trade at one point in time. With the recent decline of Visa, we are now down $500. So all of these swings from profit to losses on the call options, they make the account move a lot. And I'll show you even more, right? Down here in the long combo section, which is the call debit spread section, right? The bigger ones, AMD, you might remember we were up almost $3,000 on this trade, now only $1,300. So there's another $2,000 there. Amazon, we were up almost $3,000 on this trade, beyond $3,000, like $3,500. That is now down $2,000 as well. This CoreWeave leap call debit spread at the highs or above 135, where we were just a few short weeks ago, yeah? This trade was up $2,000. It's now down $800. So a lot of the declines in the equity right now are just coming from these call options that have a lot of time on, pulling back after these drawdown periods, right? So I'm still very bullish on all of them and still holding all of them, but the drawdowns are very natural, right? So most of the decline recently has come from the call option side of things. High quality names, just some names pulling back from their highs. And some other trades that we have right here, I replaced the NBISs and the Iris Energy with an NBIS call debit spread, December 27th, 140 versus 200 call debit spread. We paid about $1,100 for that one. You can see it's currently down as, you know, NBIS has been kind of all over the place. We played the early part of the decline after their earnings here. And now that it's down, you know, a bit more, well, obviously we're down on that position too. So NBIS, I did a bit of share replacement, replacing these shares on assignment with a call debit spread leap. You can see I also replaced a lot of those, some of those losses with a Netflix leap as well. December 27th, call debit spread, 114 versus 180. That one as well is down a little bit since we took this Netflix trade early last week. I believe it was here, right? And we declined a little bit more on the Thursday session. So that being said, right, I was taking it early, and now we've declined a bit more. So those Netflix sleeps are down. I will be DCAing those Netflix sleeps into there. But like I said, we're building these positions out. So I was freeing up some capital to build the leaps on some stuff that doesn't come around too often. So that's why I'm repositioning the portfolio right here. And then, of course, we still have our small, tiny little call debit spreads, which are still suffering a bit. Adobe, names like CRM, right? These February call debit spreads, they're still down. This Meta trade was an earnings trade. So, you know, we're going to be probably taking a tax loss on that one overall. Rubrik, that contract as well, was up decently at one point in time. It has pulled back from the high 70s. This one, we used to be up $500 on it. Now we're down 239. So you can add that to the tally of the just call options, just kind of retracing there. But look at these times, right? I have until January for the rubrics. And then the SPGIs, of course. Resolve was just basically a lottery trade. Very small lottery trade for me. And then SPGI as well, right? 510 versus 520. We've been in this for a while. We have until January for this SPGI trade to kind of lift into the 510 area to kind of clip us out at a profit. We're down small. So overall, right, some still small losses on some small call debit spreads, but where most of the losses, the erosion of the equity came from was from all of these leaps just pulling back. But good thing we have a ton of time on all these leaps overall, at least 1.5 to 2 years on most of these, and I will be adding a little bit more to these positions. You guys are probably going to see an NVIDIA one soon because now we have the capital to do it. So as a result, this portfolio right here has been an extremely volatile endeavor this entire year. You might remember I started off the year with like 45, 46,000. Now we're still up like 10% on the year, but it's been very volatile, right? And sometimes when you have a small account like this, what I've been trying to do this year is try to place, timed bets, riskier bets, have more call options on this side, right? But year-to-date gains may not be locked in to the same effect as I did on the channel the past 2 years. You might remember on the channel the last 2 years, I was running like $100,000 of equity in the YouTube portfolio and just literally doing a combination of 80% wheel on very solid, just never playing the high beta stuff like Bitcoin or the neo cloud providers or whatever the theme was at that time. No, just my casual stuff, some Microsoft here and there, Visa, Amazon, Google, Apple, all the boring stuff, right? You remember last year in 2024, we made like 65% ROI on the channel. The year before that, 2023, we made 75% on the channel. I'll pull up the videos in a future video. We'll see what we end up at the end of this year. But this year, working with a bit less capital, sometimes you got to take on more risk to try and grow it fast, right? But sometimes in terms of the timing, sometimes your leaps will come down. I'm still very bullish. We'll make a lot of money on these leaps as we've made a ton of money so far, realized gains on our leaps throughout the year as well. But, right now it's just a bit of a drawdown period for this portfolio overall. However, right, this is very volatile. I play high beta stuff. Sometimes I play earnings, right? You can see sometimes I go for the short-term swing trades, which a lot of them work out, but some of the ones that haven't worked out so far are Adobe and Salesforce. The other ones that have worked out have all been closed previously for a profit, of course, right? Now, that being said, this is the kind of high growth, high volatility, high beta, high risk profile portfolio, so it swings wildly. However, you guys also know that I have the big portfolio as well, right? And I don't really show you this too often because some people like to, let's just say when you're online and your voice is all over the place, some people, I don't know who, but some people make an attempt to get into your accounts by calling my broker and using my voice with AI and trying to pass my security questions. Thanks, guys. Appreciate it. Really inspires me to show the accounts. Real story, man. Like the internet sucks sometimes, right? But the big portfolio I do share with the Discord members. So here it is, right? Very strong, all-time high gains right now overall in the large trading portfolio. Year-to-date performance, 41% year-to-date, smashing the indexes overall. And you know what this portfolio is? This portfolio is just a whole bunch of these large account wheel trades that I call out for the Discord members. High quality, high conviction stocks with a strategy that I don't show you guys on the YouTube channel. It is a wheel, but it's a large account centric wheel strategy. Some of the trades that I like to call out sometimes, some of the bigger names, you've been making a lot of money this year, playing the Berkshires, the SPGIs of this world, McDonald's, the Visas sometimes, Moody's, some of the Equifaxes, just a lot of, you see, when we even play Costco, even though Costco is $90,000 per contract. So, in the very consistent portfolio, which is 10% leaps, 90% wheel, this year has been very easy because I literally only play a list. I have a list right here called the large account wheel list, which I share with my Discord members for people with large accounts. Our guys with large accounts this year, just people like me who play things just consistently, not high beta stuff, just the easiest plays, 4, 5, 6 different leap positions on the highest quality companies at very good moments in time and very, very smooth and very consistent wheel trading for big contracts with a month of time, 3, 4, 5 weeks. You guys know on the channel, on the Sunday videos, I show you the top 5 options for weekly purposes. And some people ask me, why do you do the weeklies? Why don't you do the monthlies? Well, I do the monthlies. And this entire account is done using the monthlies. And here are the results. When you play things, when you can play things with higher net worths, you can make a lot of money. And our success channel is filled with people with these types of portfolios, not this size. Some people have more than me in this account. Some people are working with low 6 figures as well, but anybody using just consistent wheel strategy on some of the highest quality companies and not trying to play some of these high beta things that you guys see me play in the YouTube portfolio, right? Because it's high beta, because it's high volatility, it's fine to play those names when you have like 50, 100K, but when you're working with like, high 6 figures, you can't really afford to take, 60, 80, $100,000 positions on some of those companies, like not on the crypto names, not on the high beta names. It's just not going to work, right? Your portfolio is going to be all over the place. But if you play consistently, you can end up with results like that. So I figured I should show that to you guys. So even though not making excuses for the YouTube portfolio. I'm just saying, like, obviously this allocation is going to be, it's half leaps, half call options, half leaps. It's going to be a whole lot more volatile when you're trying to grow a small account balance than when you have a large account balance that you can play a more conservative and a more consistent strategy in terms of just, you can afford to play higher quality companies all the time, even companies with lower IV, and just lock them in for a lot of time, make some good premium, and your account's going to look like this, right? As opposed to trying to go for the big swings. Yeah. So there's just a few of the portfolios. I also share my long-term portfolio as well, which as of recently is up like almost 30% year to date. I share that with the Discord members in our long-term investment section. You guys can see all of my long-term positions as well for my long-term portfolios and how I'm allocated and how we do beat the benchmarks quite regularly over the last 1, 2, 3, 5 years additionally too. So these are just a few of the, account breakdowns overall and what we did with the accounts recently. Like I said, I'll be exploring more leaps in this portfolio now that we've freed up some capital, high quality, high conviction leaps, maybe building out the Netflix a little bit, exploring some Microsoft call debit spreads, possibly exploring some NVIDIA call debit spreads on the leap side as well. So that's what I freed up all the capital for. I think it's a great opportunity to kind of consolidate into high conviction names that have sold off a lot. And in my big portfolio, you guys already know, man, I'm loaded. We're loaded with leaps, right? We made our money on Google this year. We made our money on Uber. We made our money on Apple. We made our money on Micron. We made our money on other things this year that you guys have seen me close, the healthcares, the K-Webs, tons of other leaps like that. Now I've reallocated, man, into some new positions. If you guys want to know, like the big positions in my big portfolio, you got like $40,000 of Amazon leaps. We got some Meta leaps as well, building some Microsofts, some Netflixes, some NVIDIAs. Okay, so there's just a few of the plays. I won't give them all to you. The Discord members know them all, but I'll give you some. And we're in AMD as well. We're in a ton of AMD, man, overall too. So that is kind of how we're shaping up into the end of the year. Hopefully you guys enjoyed that. And that wraps up today's video entirely. So if you guys enjoyed, consider dropping a like. Would appreciate it for the growth of the channel. Consider subscribing to the channel if you're new as well. Would love to have you back. We do these every Monday through Friday after the close. And last but not least, if you have any questions, please feel free to leave them down below in the comments section. I always love reading your guys' comments, feedbacks, and everything in between. So feel free to leave a comment down below and I will answer you. And last but not least, if you guys were interested in joining our trading and investing community of over 300 different members and having a lot of fun every single day in the markets for trading and long-term investing, you may consider joining our trading community. The link is down below in the video description, and you get a 40% discount on your first month with the coupon code capital letters Friday when you are checking out for Black Friday. I've never done such a very big discount for the Discord, but if you were on the fence and wanted to try it out, you do get a 40% discount on your first month worth of a subscription to come join us in the Discord and see how we do things in there. Of course, in the Discord, you get access to everything. Not only do you get access to my trades in the small account, but you also get access to a lot of the high quality, high conviction trades that I do in my big portfolios for all you guys with a higher net worth. We got a lot of higher net worth players in there as well. So if you're looking for a community where there's a lot of people with higher net worths playing the wheel or other strategies with more money, right? Then you can obviously join us in there, but you get access to all of the YouTube trades that you guys see me make, but the large account trades as well, the long-term investments. You can see here, right? In terms of our performance, the green little check marks are wins. The red little circles are overall little losses. These is just from the YouTube account trades and stuff like that, right? So you can clearly see, right? The one type of trade outweighs the other in terms of wins versus losses, but losses are part of the game, right? So I give you all the trades, guys, the wheel trades, the swing trades, the leap call option trades, the long-term portfolio positions as well for building some equity in your long-term portfolios, taxable accounts, non-taxable accounts, everything in between. You get access to our private morning live streams Monday through Friday. I stream live for 2-3 hours in the morning. You guys can, or I trade live, and you can also ask me all of your questions all throughout the session. It's a great place to ask me it's a great place to ask me your individual questions. A lot of you guys in the comment sections ask me questions about stocks, and I can only give such a limited answer in terms of a comment section, right? But if you wanted to know, if you want to ask me, right, what are my thoughts on some leaps on Netflix? What strikes would I pick? How would I position them? Where's the take profit areas? How do I do leaps? How do I do other various forms of things? I give so many educational answers. We can use the charts, the technicals, the options chains, and I'll show you guys why I'm giving you the answer that I'm giving you, right? Which is the context, which matters a lot. So a lot of our members enjoy those live streams because there's a lot of educational sessions in those live streams too. You get access to our educational video section, the private videos where I show you guys everything I know about technical analysis, fundamental analysis, all of my trading strategies, the large account trading strategies as well. Basically how to build a long-term portfolio too. There's over 15 hours of different strategies and content in that educational section, which I'll never put on YouTube. It's reserved for our members. You can also chat with me in our chat rooms all throughout the day. If you can't be in the live streams, you want to ask me your questions in the chat rooms. You guys know I give very detailed answers even on YouTube. So imagine what you get in the Discord. And lastly, but not least, you guys get to copy all of my charts and all of my watch lists, okay? All of them, right? So whenever you see fundamental analysis or support resistance boxes that I drive on the charts, literally with the click of a button, it takes literally 15 seconds. You get to copy paste all of my charts with all the fundamentals, all the support resistance boxes that I draw myself, and you also get to copy all my watch lists. Those are just a few of the benefits that you get in the Discord. So if you wanted to try it out, like I said, coupon code, capital letters, Friday for 40% off. I'll never do a discount like this ever again. 40% off your first month. Checkout link is in the video description. Hopefully I see a few more of you guys in the Discord with us soon. And if not, I'll see you right back here on the channel. That's it for me. Take care. I'll see you tomorrow. Peace.